Hi there, welcome to my channel where we make economics, finance, banks and investment easy to understand. If you want simple tips to manage your money and grow your wealth, you're in the right place. Subscribe now and click the bell icon so you never miss out on our latest videos. And let's get started. Dollar at 100 rubles, a new normal or just temporary shift? According to analysts interviewed by journal, the United States dollar could stay around 100 Russian rubles by the end of 2025. This isn't seen as a crisis scenario. In fact, it's one of the most likely outcomes. So why is the ruble strong now, and what could change soon? Why was the ruble so strong in spring and early summer? In the second quarter of 2025, the ruble surprised many by getting stronger, even while oil prices dropped and the economy slowed. How was that possible? The key interest rate in Russia was very high, 21%, which made the ruble more attractive to investors. Exporters were selling more foreign currency to pay taxes and follow regulations. Companies used old currency reserves saved from 2022 and 2024. These were large enough to cover 4 months of exports. Imports remained low, so demand for foreign currency was also limited. Together, these factors helped support the ruble, at least for a while. Why could the dollar rise again by the end of the year? Analysts warn the situation may reverse in the fall. Here's why. Exporters are running out of old reserves and they are selling less foreign currency. Oil prices are falling. Euros dropped from $68 to $58 per barrel, which cuts export earnings to Russia. And imports are growing faster than exports, increasing demand for dollars inside Russia. The current account surplus is shrinking from $55 billion in 2024 to $35 billion expected in 2025. The central bank in Russia is lowering the interest rate from 21 to 20% in June, with another cut likely in July, making ruble investments less attractive. The budget deficit has grown from 1 trillion to 3 trillion rubles. A weaker ruble means more rubles from each exported dollars, which helps to budget. Experts say that a strong ruble is actually bad for the government right now, as it reduces ruble income from oil and gas sales. Forecast for the dollar by the end of the 2025. According to Gazprombank and other analysts, there are two main scenarios. Scenario exchange rate by December 2025. Base case ruble $1 is 98 rubles. Alternative 103 rubles per dollar. Optimistic 95 rubles per dollar. Pessimistic is 105 rubles per dollar. And what about 2026 and 2028? The Ministry of Economic Development and Gazprombank expect the ruble to weaken slowly over the next few years. This is due to interest rate differences between Russia and the United States, weaker exports and structural change in trade. What do officials and business leaders say? Economy Minister Maxim Reshetnikov says the economy is on the edge and needs support, including a weaker ruble. Sberbank CEO Herman Gref believes the fair rate is above 100 rubles per dollar. Andrei Kostin from VTB Russia and Denis Manturov, Trade Minister, think the comfortable range is 90-100 rubles. The central bank is ready to cut rates further, which could add more pressure on the ruble. Is weaker ruble a bad thing for Russia? Not necessarily. There are both advantages and downsides. Benefits is more tax revenue from exports, higher profits for exporters, encourages domestic production. Drawbacks is imported goods may become more expensive. Ruble lose purchasing power. Investors may see more risk in the Russian economy. But economists say imports make up only about 33-35% of consumer spending, so the impact of everyday prices might be limited, especially if the ruble weakens slowly. A 100 ruble dollar may become the new normal by late 2025, not because of panic, but because of economic balance, falling exports, and lower interest rates. Unless there is a major geopolitical shift or oil price surge, most experts expect that exchange rate to stay between 95-105 rubles per dollar this year and keep drifting higher in the next few years. In Russia, Mitchell may cut coal shipments by 25%, a pessimistic outlook for 2025. Mitchell CEO Oleg Korzhov gave a concerning update. In 2025, the company may reduce the coal shipments by up to 25% if market conditions don't improve. This is the most negative scenario the company is currently considering. According to Korshkov, coal prices have dropped to the lowest possible level based on production costs. They are unlikely to fall further. One key reason is China's new import duties, which have made about 20% of global coal producers unprofitable. As a result, many companies are cutting production, which could push prices up later, but that will take a time. For now, Mitchell is preparing for a thaw year, even though Russia's coal exports grew by 1% between January and May 2025. The overall industry remains under pressure. What is Mitchell doing? Government of Russia's support. Mitchell received a 3-year tax payment deferral worth 13 billion rubles. This will help the company save about half billion ruble per month, improving its cash flow. Lower investment spending in 2025, Mitchell plans to spend 9 billion rubles in capital expenditures, 7 billion rubles to maintain current operations. Possible sale of energy assets in Russia. The company is considering selling its energy division, including Kuzbas Energy Byt and Southern Kuzbas Power Station, to improve its financial situation. What do analysts say? Experts investment call the new mixed. On the negative side, a large drop in coal shipments, no dividends due to losses. On the positive side, government help to company, cost cutting, and its possible sale of loss-making assets. We remain negative on both types of Mitchell shares. The coal sector is under pressure and the current stock valuation is too high, say analysts. They set a 11-month price target to 12 months of 69 ruble per share. Mitchell is facing a very challenging period. The market is weak, but the company is taking action, cutting expense, getting support, and considering strategic sale. Whether that will be enough depends on how the market changes in Q3, Q4, 2025, which investors hope will bring a turnaround. Thanks for watching and don't forget to subscribe and click the bell icon so you will not miss any of future tips or on economics, finance and banks investments. See you in the next video.